Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan Grebner. With us is University of Missouri livestock analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
So we haven't had a lot of positive news to talk about in the last few weeks. That this week and just late last night, China announced that they will lift the ban on U.S. beef for the first time since what, 2003?
That's right. Really haven't seen the ability to export product to China since our VSE outbreak.
So when we look at that kind of announcement, what does that mean, and how big is having another market for our U.S. beef products this week?
I think as you look at where we're at right now, number one, any new markets are much needed given the increase in beef supplies that we've seen in 2016. In terms of trying to put it in perspective, I like to remind us that pre our being cut out of that market, we were about 70% of Chinese imports of beef. So we were a major player in that market. Brazil has certainly gained imports as they were able to import here beginning in mid-2015 to China. And you look, and it's 1.3 billion people who don't consume that much beef today, but middle class that has a growing income. One can certainly get very bullish about the opportunities that exist for U.S. beef, especially longer term as we get established in that market today. And again, I will remind us that we need more consumers, and so it's great to see the opportunity to be able to import beef into China. When you think about per capita consumption there, it's very low relative to what we consume here in the United States, less than 10 pounds per person today in terms of per capita consumption. It doesn't take much mathematics to show that a doubling, tripling is a large amount of U.S. beef supplies that we produce today. So it could be the market mover longer term.
Now, we don't know how soon it will happen, or this was, I guess, just the first step in that announcement. Does that also maybe play into what it means for the U.S. markets, depending on how long it takes to make it happen?
Yeah, absolutely. And I think markets are going to be a little slow to react because we've kind of had this on again, off again dance with the Chinese about being able to import beef and being able to get beyond that to really moving product. We know there's some things we have to see happen before we can really import beef to them. I think most right now are hopeful that perhaps we can get resumption of trade before the end of the year, but know that we still have some work left to do.
On the contrary, last week we talked about the fact that Brazil had been approved to export beef, fresh beef, to the U.S. market, and we have more news on that this week, and more beef than coming into a market that already seems like it has enough to handle.
Yeah, I don't think U.S. beef producers are very excited about additional Brazilian beef coming into the United States, given the decline that we've seen in cattle prices in 2016. Yet this week we see now, I think we have at least 3 companies that have plants that are able to import fresh beef into the United States. And yes, all else equal, that might give us a little more supplies of beef. I'd at least like to come back and remind us that we do have quotas in place for beef imported into the United States, about 65,000 metric tons in total here in the next couple of years. That has to be shared among a number of countries. So it's not like it's limitless in terms of what Brazil can do, nor is it necessarily economically feasible for Brazil to just flood our market. Much lower prices for us in this country don't make us as attractive as we were a couple of years ago for Brazilian beef. But that 65,000 metric tons certainly is a cap for us and is a small amount relative to the overall production that we see in this country. So I wouldn't want folks to overstate the negative drag that we're going to get. Yes, it will be negative, but it's not maybe nearly as negative as China could become positive to us as we look ahead.
Scott, one of the things that we touched on last week was the weight of cattle or calves when it comes to marketing. The market seems to indicate that it's wanting some heavier calves right now, or it's paying maybe a little bit of a premium to that. How do producers figure out what works for them and to best strategize maximizing their return?
Yeah, so a lot of things I think at play here. As you look this week again, maybe smaller runs of calves than we would have thought so far. Now, maybe we're just not getting into when we're going to see a lot of the spring calves moving to feed yards this fall. But just as we had a problem in 2015 with feed yards holding cattle too long and being too big, we could run into the same thing when we start thinking about holding those calves through the winter perhaps and backgrounding them. We built frame on those animals, and guess what? At the end of the day, we have more beef to worry about because they're going to finish to a heavier weight than we're used to. Markets are seeming to suggest they're not as interested in lighter weight calves. If you look at what we saw this week, calves that had been weaned less than 45 days actually sold at a discount relative to a week ago, yet we got a little price strength in some of the heavier weight categories. I just remind producers that, yeah, that might be a strategy to pursue, is to hold those calves for a little longer period of time. But if you do nothing on terms of price risk management, just realize you're fully going to be at the mercy of which way markets move. So what looks like a good decision today because of those relative price differences by weight categories could all go away by the time you sell those heavier weight calves. So make sure you've thought carefully about the additional risk you're taking if you want to hold those calves longer than normal.
Scott, does that come back and maybe talk or remind producers that they need to do that risk management, maybe lock in some feed costs, lock in those inputs to make sure that they don't lose in the long run?
It's one of my largest concerns for producers because we don't tend to do that in the cattle industry, especially the cow-calf portion of the industry of using price risk management. A lot of folks just aren't interested, and I think that right now, given where markets are, it's critical to think a lot harder about that. I tell producers, so sure, you can be self-insured if you have no debt against that operation, but if you can't stand a lot of risk in your bottom line, then I think you have to much harder look at those alternatives, and we just haven't been there for a while. It's pretty easy to market when prices are going up, and we've seen that for a long time, and we're finding it much harder to market when prices are going down. I just don't want us to get in the mode of, well, we're going to wait these markets out until they turn around and go higher again. Unlike corn that we can store for a long time, those calves eventually have to go.
Let's talk a little bit about production numbers this week, Scott. Another big week for the big three on the protein side.
Yeah, when you look at some of the numbers we've gotten out of recent production reports, we are much higher. Commercial meat production in August set a new all-time high for the month at 4.4 billion pounds. Now, part of that was we had a couple of extra days of production in August out of that report, but that doesn't really get us out of what's been going on. If you look at August poultry production, it also set a record at 4.2. So we're setting up there at record levels of meat production. On the pork side, we haven't talked much pork today. Last week's pork production at about 513 million pounds. Only 10 weeks ever have we been above 500 million pounds of pork being produced. So it gives you some indication of what's happening on the pork side as well. And I think that's why we see hog prices continuing to slide. We're off another $3 on cash hogs this week. It's been a tough last 60, 90 days on the pork side as pork supplies have been increasing.
Before we get into talking a little bit about the pork side of things, what about the input side? Corn and soybean prices as we get into harvest, is that still helping producers stay closer to the black and not see the red with all these decline in prices?
Yeah, so thank goodness we have some cheaper feed prices to deal with than we have for a while. Otherwise, what's a not very good situation would be an absolute disaster for us. I think it is important to be looking at what we're seeing in terms of signs of harvest so far. I keep hearing perhaps corn yields are not as good as we would have thought earlier on. If USDA in their next report were to revise corn yields lower again, Does that give us enough shortness that we start to see corn prices move higher? I don't know. Might be time to do a little locking in of feed costs here for a period of time. And so, yeah, that's been, frankly, the only thing that saved 2016 from being just an absolute disaster in terms of bottom lines.
All right, we talked about a record week in pork production, and we keep talking about the shackle space issue. We're getting closer to the end of 2016. We keep seeing big numbers coming out of pork production. What does this mean for that, and what do we need to think about as pork producers here in the U.S.?
Yeah, so as I look at what we're doing so far, it continues to suggest to me that issues related to shackle space in the latter part of 2016 are only growing. So we probably have only an increased chance of running into some problems as we get into late 2016. It's going to be nip and tuck, and so I don't want to overemphasize where that may go, but just numbers that we're running today, to me, tells me we've got a lot more pigs we're going to get to deal with as we get into this last quarter of 2016. And of course, as you know, Meghan, next week, Hogs and Pigs report comes out. I think that's going to be really critical to where we see this pork market for the remainder of 2016 and into 2017.
Anything else this week, Scott?
I think we've covered most of the news we can, and let's hope that we get more positive news out of China, and we can actually move some beef there very soon, because we got a lot of meat supplies to deal with for the remainder of this year.
Scott, good to see you this weekend. We will definitely keep an eye out on that Hogs and Pigs report, and we'll talk about that next Friday.
Very good, Meghan.
All right, Scott. To have our weekly livestock market update delivered to your inbox every Saturday morning, visit our website, brownfieldagnews.com, and click on the subscribe link. I'm Meghan Grebner on Brownfield.